Joining me now to provide insight on the day's market performance is Nesi Chetty from Stanlib. Nesi, thanks so much for your time this afternoon. So, sentiment shifting yet again following Trump's pause on tariffs on consumer electronics, including phones and laptops. But Trump's administration has signaled possible new tariffs on semiconductors, meaning that the pause could be short-lived, and I guess the move nothing to be too excited about.
Yeah, good afternoon to you and your viewers in Thailand. I mean, it's certainly been a roller coaster of a week when it comes to equity markets, currencies, and commodities. We've seen exceptionally volatile equity market, I mean, into Friday and I guess today as well. Most local and global markets are up nicely today. The Aussie is up some 1.6%, but that's being led by financials and industrials. I guess if you look at the bounce in the market, a large part of that has been the reset on tariffs. We saw President Trump temporarily halt tariffs on consumer electronics, although he does warn that the levies may return under national security provisions. So the tariffs that they applied to, I guess, phones, computer, and consumer electronics, downplaying, I guess, a weekend exemption where things were expected to get a lot worse. You saw the market on positive sentiment re-rate on the back of that.
And what I want to talk about when it comes to those tariffs, the consumer electronics tariffs, is Apple. Seems like Apple really bouncing back following that announcement, and we know this because Apple makes most of its iPhones, assembles most of its iPhones in China. Now, with this at play and the possibility of perhaps more tariffs being slapped on China, or those tariffs coming back into play, do you expect Apple rather to perhaps move their manufacturing hubs? I read reports around Apple perhaps maybe building even more hubs within India.
Yeah, so in Thailand, I think if you look at what global companies are looking at, they're looking at sort of the optimum location where they can sort of manufacture and minimize, I guess, overall impact of tariffs. Onshoring has been something that has been spoke about extensively. If you look at sort of exports and I guess those companies operating outside of the US, I mean, you would have seen like Chinese export volumes have increased significantly.
Yes.
I mean, that's reflecting strategic moves by exporters to mitigate impending trade barriers. So whether you're relocating to a new location or you're looking for a temporary hub where you can minimize some of those restrictions, I think all of those companies will look to that. But whether it's a temporary application of tariffs or whether it's a long-term sustainable impact on the sector, no one still really knows.
We are in for some interesting times, Nesi. Now, earnings season kicked off on Friday. We had major banks, Morgan Stanley and JP Morgan, reporting results for the first quarter. Profits really upbeat. Those numbers pretty much upbeat, but I guess the main concern here, or the main focus, was on commentary and on the outlooks, considering that we now have those tariffs in play and we have some idea of the scope of the tariffs and what they look like. Do you expect to see more companies, I guess, adjust and change their outlooks now that we do know what we're dealing with?
Yeah, look, I think we've got a very interesting season when it comes to quarterly earnings being reported into the US. I think if you put tariffs together with interest rates, potential interest rates being on hold or on decline, there's certainly, I guess, demand that's coming off, which will place pressure on revenue across the board for some of those industrial and financial services companies. Higher input costs due to tariff increases means that across the board, you're probably going to see some margin contraction for some of those industrial companies. So it's certainly a quarter where we think earnings likely to come in under pressure. I mean, the S&P, the pullback, I guess, in the S&P is certainly reflecting that. I think you've also got to add into account, I mean, the Federal Reserve did release their minutes from their March monetary policy meeting, and across the board, most policymakers would have seen just increased downside risk to employment and economic growth. While, I mean, the inflation risk is still there. So judging from where inflation settles, I mean, the Federal Reserve is still ready to act and intervene in markets. But right now, I guess it's a wait and see approach from the Fed amidst the tariff uncertainty. And most companies, I guess, the performance is reflecting that.
All right, Nesi, now within that environment, that macro environment, where are you seeing value at the moment? What is your stock pick?
Yeah, if I look at the South African market, I mean, we've liked Resilient Property Fund, which is a 30 billion direct property portfolio with the large chunk of its assets, almost 27 billion in South Africa and 3 billion in France and Spain. What we like, I guess, about this asset is it's lower in rural retail shopping centers where, one, the vacancies are quite low. If we look at a company like Resilient, it's dominant across those regions. They're getting at a time in the cycle, I guess, flat to slightly good revaluations on the portfolio. So strong performance from the SA portfolio, and we would expect through the cycle for them to do sort of 4 to 5% sort of growth across the board. Spain and France is giving them a good buffer in terms of offshore diversification and particularly strong earnings growth. It's one in the cycle where we think it's likely to maintain or improve slightly, showed better distribution growth. Certainly, they're guiding to sort of low single digits, high 5% and up. But retail in South Africa is going through a structural change in retail, especially at the lower end. And a company like Resilient, which has quite a strong balance sheet, with LTV being that 37, 38, and is trading at a 20% discount to NAV, with a very attractive forward yield, we think is a good, probably medium to long term investment through all this uncertainty regarding, I guess, tariff and rate increases.
Nesi, thanks so much for your time and sharing insights on trade at midday. That was Nesi Chetty from Stanlib.